Welcome to the Author's Corner. I'm Ethan Yang. President Biden has made three new nominations to lead the Federal Reserve, our nation's central bank. They are Sarah Raskin, Philip Jefferson, and Lisa Cook. Lisa Cook, in particular, is an accomplished Black economist who has drawn significant controversy regarding her qualification and views. Recently, Senate Republicans on the Banking, Housing, and Urban Affairs Committee have levied intense criticism, leading Professor Cook to block the Senate GOP committee on Twitter. Dr. Cook's qualifications are certainly impressive and her views are innovative, but are they appropriate for the Federal Reserve Board of Governors? Joining us today is AIER Senior Fellow Tom Hogan to discuss these issues and more. Tom, how are you doing today?
I'm great, Ethan. Yeah, glad to be talking with you.
Of course. And so Tom, before coming to AIER, has held positions at various universities and also served on the exact same committee in question as well. He was the chief economist in the Senate Banking, Housing, and Urban Affairs Committee. So just to start off, since everyone these days seems to have an opinion on monetary policy and banking, can you tell us a little bit how this committee works? How does the Fed work, and why are these nominations important?
Yeah, absolutely. So let's start with the Fed. So the Federal Reserve is the central bank of the United States. And so they manage the money supply in the United States. And so that's very important because money is one of the key drivers of short-term economic outcomes. When the economy is doing poorly, the Fed tries to put money into the economy to get it going again. And when it's growing a lot and might potentially have a bubble or inflation, then they take money out of the economy to try to prevent those bad outcomes. And so understanding how money affects the economy is the most important thing for people that are at the top of the Federal Reserve, because they're managing the economy, affecting the economy of the whole United States, millions of people's jobs. And so it's really vital they understand the inner workings of the economy. Now, the Banking Committee, the Senate Banking Committee is one of the oversight committees for all of the financial regulatory agencies. And the Banking Committee is made up, the number changes in every Congress, but roughly 20 senators that are going to decide issues related to money and financial regulation. And so the committee is roughly split Republicans and Democrats, and whichever party is in power at the time that has more seats in the Senate gets to really kind of determine what goes on at the committee, what hearings they're going to have, what kind of bills are going to be passed through the committee. And so they have a little bit more power. And that's a little bit important right now because President Biden has nominated three new people to be members of the Board of Governors. That is the group of people that runs the Federal Reserve, and those people have to be approved by the committee and by the Senate in order to take those positions. And so right now, it's very controversial because we basically have a 50-50 split in the Senate. And so the Vice President Harris gets to cast the final vote that would decide whether these members are going to be approved. And so the first step is for them to go through the Banking Committee, to have a hearing, to have a vote at the committee level, and then presumably go on after that to have a vote in the full Senate. And so this hearing, we just had a hearing for these three nominees this week in the Banking Committee. And so they discuss all of the accomplishments and background and qualification for these committees, for these nominees, and then hear from them. The senators get to ask them questions and get some feedback.
So why is this controversial? Because the way I was taught about monetary policy, it's supposed to be this very apolitical, almost boring, just take the money out of the economy, put the money in, keep employment low, keep inflation low. Why do we even have these different opinions and all the sorts of arguments over Fed nominees?
Yeah, that is absolutely right. It is unusual because the Fed is not supposed to be political. The Fed is supposed to be independent because we don't want them subject to political influence in their decisions, because they might affect the economy in bad ways. And so there's a lot of history of this, where when central banks become political, they make bad decisions. So the most obvious problems are in countries where the central bank is not independent at all. And so in that case, the president or the dictator or whoever can just call up the central bank and say, like, hey, print $1 billion and send it over and we're going to spend it. In the United States, that can't happen. The central bank, the Federal Reserve, is supposed to be independent so that they're not subject to these political pressures. But sometimes, even in the United States, that doesn't always work out. And so there are famous examples. For example, Richard Nixon famously pressured the Fed chair at the time, Arthur Burns, to try to stimulate the economy in an election year to make it look good, like Nixon was doing a great job so that he would get reelected. And obviously, that's something that we don't want. And so we've tried hard in the United States to make the Federal Reserve independent and not subject to political influence. But it definitely does happen. And especially right now with the controversies that we're having in politics, there's become more and more pressure on the Fed for various political reasons. And so that's why it's so important right now, and especially for these nominees.
So you're saying that traditionally monetary policies is supposed to be regulating the money in the economy to ensure that the inflation is low and the economy is running well. But now we have different ideas pertaining to should we use the printing press essentially to fund infrastructure projects or climate change policy, or should we use the various instruments of the Fed to attack certain industries like fossil fuels, for example, that we don't like. So that's kind of the controversy right now.
Right, exactly. Yeah. So the Fed has a dual mandate to try to keep inflation and unemployment low. And so, of course, that causes some problems because there's a trade-off. What if inflation is high and they're worried about unemployment? How do they decide the importance of those two variables? And it's supposed to be as scientific as possible. But unfortunately, now the Fed is starting to stray from that mandate, partly because of assignments by Congress and partly because of their own decisions, that they've gotten into these other areas. Like you mentioned, climate change. They've been pressured to address racial diversity and inequality in terms of the different unemployment rates from different races and genders. But even other issues about deciding what's supposed to be happening in the economy. The Fed is supposed to be independent and thinking about the best outcomes for the economy as the whole, and not picking specific industries or not steering capital into certain projects or industries or companies. But it started to do that a little bit. In the COVID crisis, the Federal Reserve tried to stimulate the economy with, expansionary monetary policy, but they also had bailouts for specific sectors of the economy, not just banks and financial companies like they normally do, but they started lending to non-financial companies, which was not their job. They started lending to state and local governments, which is not their job. And previous Fed chairs like Ben Bernanke and Janet Yellen had said the Fed would never be involved with those areas. But recently, Fed Chair Jerome Powell said, especially in that crisis, said the Fed will do whatever it can to support the economy, and which meant he wanted to get involved with lending to non-financial companies, lending to state and local governments, again, things the Fed should never do. Jerome Powell has also been more willing to talk about climate change, to talk about other things that really the Fed should, by most standards, not be involved with. And so, he's opened the door to more political pressure at the Fed.
And before we just dive into the meat of the discussion, just, I guess, so our audience gets the point, what happens when you crank the politicization up to 10 and you're throwing money all over the place? Why is that even the problem?
Well, first, we don't get the focus on monetary policy that will bring the best outcomes for the economy. But second of all, it's unfairly choosing political decisions, choosing who and what companies and what industries are going to get money and which ones are not. And so that's, again, something that the Fed is supposed to be independent and not making those kind of political decisions. And so the more that we do that, the worse the outcomes are going to be for the total economy and for average Americans.
So jumping into the nominees, I've heard Phil Jefferson's relatively uncontroversial, at least compared to the next two. So I'd like to hop into first to Sarah Raskin. So what can you tell us about her? How was her performance during the confirmation hearing, and what were her views generally that caused so much criticism?
Right. So yeah, you're right that Philip Jefferson is somebody that he's an economics professor from Davidson College, and he's a former Fed economist, and everyone seems to think that he's very qualified and non-controversial. Sarah Bloom Raskin I think is very well qualified. She was formerly a a Federal Reserve governor. And so she's been on this board at the top of the Federal Reserve and has experience there leading it. She's now a professor at Duke University. But since she was previously at the Fed, she's made a lot of comments about how the Fed should try to address climate change, and not just in the way that so Jerome Powell, the current Fed chair, has made comments that he thinks that they should worry about whether banks have risk exposure to climate change. But Sarah Bloom Raskin has gone beyond that, saying the Fed should be allocating money to certain sectors of the economy, that they should try to be steering money away from companies that are going to affect climate change. So obviously like oil and gas and those kind of industries. And she even said in the New York Times op-ed that if those companies get in trouble, that the Fed should just let them fail. They'll just let them go out of business. And so obviously, any senator that is from a state that has a strong oil and gas interest is worried that now she's promoting just letting these companies fail and creating unemployment in these industries and steering money away from industries that are creating a lot of value for the US economy and making things better for taxpayers that want lower oil and gas prices, that want lower electricity prices. Raising the cost of all those things is probably bad for most Americans. And so it's worrisome that she for her own political agenda wants to steer the US economy, steer money away from certain industries and into other industries. And so that's again something that Federal Reserve governors are not supposed to be doing. And it's very worrisome that she was making those comments. She also specifically said that the Fed should be allocating capital. And then in her testimony, at the hearing this week, said that that is not the Fed's job. And so several of the senators were directly questioning her. Look, this is a quote from what you've said in the past that contradicts what you've just told us right now. And she kind of tried to just look, that's not the Fed's job. I admit that they're not supposed to be doing that. But when they asked, well, what about these things that you've said in the past? They contradict what you're saying now. She kind of just didn't answer and just saying, that's not the Fed's job. We're not supposed to pick winners and losers. I understand that. And so obviously they were skeptical about what she's saying now compared to what she's said in the past.
So let's move on to the person that all the controversy is surrounding right now, which is Lisa Cook. The general narrative is she'll be the first Black woman, if confirmed, to be on the Fed. It's a historic moment. Very accomplished professor, serves in many different organizations, has plenty of experience in the economics profession, has published all sorts of impressive looking research papers. She has blocked the Senate Republicans, the GOP banking committee on Twitter. There's all sorts of articles on the internet right now just calling out the Republicans for being racist, for opposing her. There's basically a weird cultural fight over a Fed nominee, which I think is so weird today, given just what the Fed is. So can you give us a general, let's get a little bit into it. What are the general concerns that Republicans might have, or not just Republicans, people concerned about a traditional monetary policy? What concerns might they have about Lisa Cook?
Yeah. So first of all, you're right that it is really unusual that we're having this political fight. But again, it's part of the result, like we mentioned earlier, that the Fed has become so political. They're supposed to be independent. And so, why are we even talking about this? It seems pretty strange that this should be such a big fight. And so the main criticism of Lisa Cook is that she hasn't done any work in monetary economics. Again, that's the main job of the people at the Board of Governors, is they're steering the entire US economy, or at least influencing with monetary policy. And so they need to have a very strong understanding of monetary policy. And that's just not what Lisa Cook has done research on. Maybe there are certain roles where she potentially would be good, but as an expert on monetary policy, it doesn't seem appropriate. And so it's a little bit strange, because this same thing has happened in the past with other nominees for the Fed Board of Governors. So, for example, Peter Diamond from MIT, who was the winner of the Nobel Prize, was nominated and eventually ended up withdrawing his name after getting criticism for just not being someone that has written about monetary policy. And so if the winner of the Nobel Prize gets denied for not having this experience, it doesn't seem like it should be that controversial. The same thing happened recently with one of Trump's potential nominees, Stephen Moore, that people said, look, this guy, he's just not a person that does research on monetary policy. Maybe he would be good for the Treasury or has experience with fiscal policy, but monetary policy is just not his area. And in fact, at AIER, Will Luther wrote an article that said exactly that. Look, this guy might be qualified for other posts, but he doesn't know about monetary policy. And so, ended up withdrawing. And so it seems like in the past, that has been a normal criticism for people that just weren't an expert in this particular field. And that's the main criticism that people are using about Lisa Cook as well, is that she's just never written anything about monetary policy. And so it doesn't seem appropriate for this position.
So I'm going to read to you some of the titles of her publications that are causing, conservatives and libertarians to basically freak out. And I'm just curious about why does this disqualify her from being on the Fed, or maybe why should this raise eyebrows? We have getting money urgently to low-wage U.S. workers, Washington Center for Equitable Growth, rural segregation and racial violence, historic effects of spatial racism, published in the American Journal of Economics and Sociology, the implications of U.S. gender and racial disparities in income and wealth inequality at each stage of the innovation process. Well, these sound like very, impressive, innovative papers or publications. Why are people concerned?
So, I think people admit that she does have some good publications, but as the titles of the papers that you're reading indicate, a lot of that has to do with disparate outcomes among race, which is really not something that the Fed has any influence over. So monetary policy affects the entire economy, and it's just a very broad brush that can't be used to paint very specific issues in the economy. And Fed chairs admit this. Current Fed chair Jerome Powell said, it's a broad brush, and basically said we can't use it to have very specific, race-based outcomes. And previous Fed chairs, also Janet Yellen, who is now the head of Treasury, that is making a big deal about, addressing race and climate change, when she was at the Fed, said, these are things that are not the Fed's job. The Fed can't affect issues that are related to, racial diversity or different outcomes among race. When we look at race and gender differences in unemployment rates and things like that, she said, look, these are long-term structural issues that just can't be addressed through monetary policy. And so even people that think that that is something important, obviously Janet Yellen thinks that that is a very important issue, but thinks that the role of the Federal Reserve governor is not to address that, because it's not something that can be done using monetary policy. And so that's why, Cook, even though she's written papers on that topic, again, it just doesn't have to do with monetary policy. And so that's why it's not something that is normally considered a qualification for her.
So perhaps a better pick for a different agency. But to push back, I have some fun quotes, to say the least, from various publications of note. So MSNBC would respond to what you just said by saying, at a time when the Federal Reserve is considering strategies to reduce inflation, including hiking interest rates, curbing people's ability to spend, Cook's consideration for how such economic policies may affect marginalized groups is a danger to Republicans who couldn't care less. Your response?
So, they're obviously not just being political in terms of thinking about race and gender there, they're picking on specific political parties. And this is partisan, right? It's like that's part of the reason that Cook was selected and part of the Democratic Party platform. And, again, in the Senate right now, it's basically split, Republicans and Democrats, 50-50. And so this is an extremely political issue, and a political nomination. And so that, again, is what some people are worried about, is that the Federal Reserve should not be political. The Federal Reserve needs to be independent in order to get the best outcome for all Americans. And, again, current chair Jerome Powell said, look, the best thing that we can do for minority rates of unemployment is to increase the total rate of unemployment. And I believe that's the same thing that Janet Yellen and Ben Bernanke had said before him. And so it sounds like, even though all of those people admit that, disparate racial outcomes is an important issue, it's just not something that the Fed can do. And so, trying to inject that into the Fed's policy is just putting politics somewhere where, it just doesn't belong. And so that's why this is such a acrimonious fight for these nominees is the big picture question about, should the Fed be a political agency or should it continue to be independent? Most of the economics research says having an independent central bank is better for the economy than having a politicized one. And so that's just the factual evidence that we have from the research in economics.
So before we move on, I'd like to have you react to one last quote. Comes from Professor Derek Hamilton from the New School in New York. He's a professor of economics and urban policy. And he says that the status quo, the one you just essentially the apolitical Fed, has served the interests of an elite that has no desire to reorient power. And politically, the anxiety around race is being used as a strategic football. And then he characterized those who question Cook's credentials as racist and sexist. Your final response to that?
Well, I mean, like I said earlier, the same criticism was deemed legitimate for nominees in the past, and so I mean, I don't know who he's responding to, or if people have done anything that might actually be considered racist or something. But the senators, the way that they were discussing it in the hearings, they seem to be, focused on her credentials, and both Raskin and Lisa Cook, they had issues about whether their views would be appropriate for the Board of Governors and whether they were being, consistent and people that would be good for monetary policy. And so, I think that for both of those candidates, part of the big question is just, do we want the Fed to be political or not? And most of the economics research is that we do not, that the country is going to be better off if we can keep the Fed independent. That's going to be the best thing for Americans of all races and genders. And the best thing long-term for America is to have an independent central bank.
So to end this interview, let's just talk a little bit about what AIER would consider sound monetary policy. You've talked a lot about essentially keeping the Fed out of politics, being just as independent as possible. So what sort of doctrines should we be looking at? What are some of the classic monetary doctrines that would probably make for a better Fed chair nominee?
Well, one of the so just generally, we would like to have what the AIER has what we call the sound money project. So we want sound money that is going to be stable and consistent and predictable over time. Those are all things that economists find lead to good long-term economic outcomes. The Federal Reserve should be trying to respond to the economy in terms of supplying the amount of money that's needed and not manipulate the economy by trying to change its direction or trying to push unemployment around using interest rates. That it should be responsive to the needs of the economy. So what is going to lead to good outcomes there? One of the questions is about discretion in the Fed. So should the Fed be deciding, should the governors themselves just be deciding what monetary policy is and have a different opinion every week, or should they follow some long-run predictable rules? Most of the economics literature says that they should follow predictable rules because that makes it easier for private individuals and businesses to plan for the future, to invest. For businesses, they want to be able to know what the Fed is going to do so that they can plan for the future, so that they can invest and build factories and hire new workers. And all of those things, a stable, predictable monetary policy is going to be the best thing for the economy. And so that's kind of what we have in mind when we talk about sound money, is stable, predictable Fed policy rather than discretion where we don't really know what's going to happen. sound money is going to be better for the US economy and better for all Americans.
With that, thank you, Tom, for a very insightful commentary on these pressing issues today. If you liked what you heard, you can make sure to follow AIER on Facebook, YouTube, Twitter, as well as check out our website at aier.org. If you'd like to support more cutting-edge commentary and analysis, make sure to become a donor. All that information and more can be found at aier.org. Thank you.